Australia's been a major player in the international coal industry since the early 1970s, but most Australians are very poorly informed about the extent of our country's role in it. So in the interest of awareness raising, this evening I'm going to give you a brief overview of just how significant is Australia's role in coal production, coal exports and coal-fired electricity generation, because all three issues continue to shape Australia's role in addressing global greenhouse gas emissions and the future development of energy sources and jobs in the country. Now, the bulk of Australia's coal comes from the Bowen Basin in Queensland, the Hunter and Illawarra valleys here in New South Wales, and the Latrobe Valley in Victoria. This shows black coal resources. Most of the coal mined in Queensland and New South Wales is black coal or anthracite, and it's used for metallurgy. That's called coking coal, or for electricity production, that's called thermal coal. Almost 97% of Australian coal for exports is produced in Queensland and in New South Wales. This shows you the proportion of metallurgical and thermal coal going to Asia and Europe. As you can see, it's about half and half for Asia. It's much more geared towards metallurgical coal for Europe. Now, everyone here would be well aware that coal has provided the world with cheap energy for well over a century, and that many national governments remain convinced that it will continue to provide an important source of energy for many decades to come. Carbon capture and storage has been touted as the technological fix for carbon emissions from coal-fired power, but there are sound economic, technological and environmental reasons for being sceptical about the role of coal in the world's energy future, as I'll try to explain over the next 20 minutes or so. More than 3/4 of the world's proven coal reserves are held by 5 countries. By far the largest of these reserves is held by the United States, at around 29% of the global total, followed by Russia, China and Australia, which hold about 9% of global reserves. Australia recently overtook India as the country with the 4th largest proven coal reserves in the world, and has maintained its position as the 4th largest coal producer, behind China, the US and India from at least the late 1990s. In 2007-08, Australia produced just over 400 million tonnes of coal, which was around 6% of total world production. But unlike these other countries, Australia exports far more of its own coal than it consumes. Australia has in fact been the largest coal exporter in the world since 1984, when it overtook the US in that role. Australia now controls roughly 30% of the global coal export market, as you can see from this pie chart. In 05-06, Australia exported about 60% of its annual production to 35 different countries, and about 3/4 of that export coal went to our Asian neighbours, Japan, South Korea, Taiwan, India and China. And contrary to what many of our politicians would have us believe, most of that coal went to Japan. About 45% of it to be precise, as you can see clearly from this bar chart. Now, Australia's preeminence in the global coal trade is the result of a combination of shrewd investment by coal mining companies and bipartisan political support and patronage for the industry over the last 4 decades. The strategic partnership between the industry and successive Australian governments at the state and federal levels has enabled a massive expansion of coal production and Australia's coal export markets over this period. This line graph shows the increase in Australia's coal production this is the wrong one, I should go on to the next one. Coal production from approximately 150 million short tonnes of coal in 1984 to 391 million short tonnes in 2004. That's a 160% expansion in overall production over 20 years. And as you can see, coal consumption during this period only increased by about 90% over the same period. That's domestic coal consumption, which enabled a significant increase in Australia's exports over the period. So between 1960 and 1980, Australia's coal exports grew exponentially from 1.2 to 43.2 million tonnes. Between 1980 and 2002, coal exports grew a further 360%, from 104 million tonnes to 198 million tonnes. Thermal coal exports for electricity production grew even more rapidly during this period, and they grew by a factor of about 10 over that period, as you can see from this graph from A there. As you can see from this bar chart, while coal consumption remained relatively stable throughout most of the world between 1997 and 2007, it almost doubled in the Asia-Pacific region over the same period. Now, 2/3 of the global growth in coal consumption during this time was in China. Now, according to the International Energy Agency, whereas coal consumption was actually significantly reduced by many Western European countries between 1980 and 2002, and that included Belgium, France, Germany, the UK, Poland and Russia. In the US, Spain, Australia, China, Japan, India and South Africa, all of those countries increased their consumption of coal. So to give you a few examples, France decreased its coal consumption to about 40% of 1980 levels by 2002. That was largely through converting to nuclear power. The UK to about 47% of 1980 levels. That was largely through converting to gas. And Germany to about 63% of 1980 levels by 2002. That was through a mixture of gas and renewable energy. Now, by way of contrast, the US increased its consumption of coal by almost 50%, Japan by 80%, China by 100%, Australia by 130%, and India by 230%. Now, there are a number of different political, economic and demographic reasons for these increases and decreases in coal consumption. But the message I'm trying to get across is that increased coal consumption is not and never has been inevitable for any country. Technological and economic pathways that our countries choose are not inevitable or set in stone. We could have chosen to go down different energy development pathways, and of course we still can. Now, it's generally assumed that coal mining makes a significant contribution to Australia's economy, but that contribution is nowhere near as large as we are generally led to believe, whether we're talking about gross revenue, export earnings or employment. And when billions of dollars in hidden government subsidies are factored into the equation, the economics of the coal industry start to look very questionable indeed. Now, in terms of gross export revenues for Australia, the coal industry generated 24.5 billion in 05-06, 22.5 in 06-07, and a massive 42 billion in 07-08. At the peak of the recent commodities boom. Now, the industry has been generating so much money in recent years that some of our politicians have been struck with coal fever. Some of you may remember that the former leader of the opposition, Dr. Brendan Nelson, was supposed to have had a good head for figures. Now, one of the figures that he cited early last year on public television was that the mining, energy and metals processing industries contribute 37% to Australia's GDP. But Dr. Nelson's head for figures actually wasn't that good, because these three sectors actually contribute less than 15% to Australia's GDP. And if we isolate the contributions of the coal industry to the Australian economy, we find that it contributes less in export income than either the tourism or the food industries. Between 1990 and 2008, coal contributed an average of 10 to 20% of Australia's export income, but only 3 to 4% of GDP. Now, that's around the same contribution as Australia's total agricultural sector, and it's only 1/3 of the contribution of Australia's manufacturing sector at 10%. And in the late 50s, manufacturing was 30% of the economy. Now, coal also makes a relatively small contribution when compared to the Australian services sector, which is by far the largest, around 72%. And its overall contribution is expected to shrink by 1/3 to 1/2 in the wake of the global financial crisis. Now, furthermore, in terms of employment, the coal industry doesn't generate nearly as many jobs as its spokespeople would have us believe. While it's true that the coal industry directly employed about 30,000 people around the country at the height of the recent mining boom, several thousand jobs have disappeared since then, meaning that it now employs around the same number of people as the hardware retailer Bunnings, and less than half the number of people employed by the McDonald's chain of restaurants across Australia. The coal industry also employs less than half the number of people employed in tourism for the Great Barrier Reef. Now, here in New South Wales, about 14,000 jobs in coal mining existed at the peak of the boom in June 2008, and around 1,000 of those jobs are here in the Illawarra. And the industry has been very vocal in arguing that it should be shielded from the effects of introducing a carbon trading scheme due to the potential job and revenue losses to the economy. But I think we need to get those claims into some perspective. But with a similar share of national GDP, Australian agriculture generates 300,000 direct jobs, which is more than 10 times as many jobs as the coal industry, while the Australian tourism industry generates about 500,000. Jobs and revenues from both of those industries are threatened by climate change, but the unspoken assumption of the major political parties appears to be that jobs in the mining, energy and metals processing industries are more valuable than jobs in agriculture or tourism. And if the historical behaviour of past governments is anything to go by, jobs in the energy-intensive industries are also far more important than jobs of public servants. Former Victorian Premier Jeff Kennett, as some of you may remember, sacked 50,000 public servants shortly after he came to power in 1992, including 7,000 teachers, while the previous Howard government sacked more than 25,000 public servants between 1996 and 1998. The Rudd government has also spoken about significant job losses in the Commonwealth public sector since it came to power last year, but it's very difficult to work out how many people have actually lost their jobs since then. Now, it's far too simplistic to argue that mass sackings in the coal mining industry or its continued expansion are the only two choices that we have as a nation. The fact is that coal contributes more than 30% of the world's greenhouse gas emissions, and even if carbon capture and storage technology was demonstrated to be economically viable, and there's a growing consensus that it won't be for at least another 20 to 30 years, the Earth can't physically hold the volumes of carbon dioxide that we're currently producing, let alone what we're projected to produce over the next few decades, according to most business as usual scenarios. Now, if we are serious about addressing anthropogenic climate change, a gradual phase out of the industry over the next 10 to 15 years is what the science demands. That means structural readjustment for the whole industry and retraining and redeployment of management and workers as the industry is wound down, just as Australia did in the manufacturing industry in the 1980s. We've done it before and we can do it again. However, phasing out the coal industry is the exact opposite of the policies currently endorsed by Australia's major political parties. Not only do Labor and the Coalition appear to have no reservations about the continued expansion of the Australian coal industry, they fully intend to exploit the huge projected increase in demand from India and China over the next 20 to 30 years. That would seem to be because they have no confidence in the willingness of developed countries to assist China and India to make the wholesale transition to renewable energy that the science demands. Now, the US National Academy of Sciences found in 2007 that world coal production is likely to peak by 2050 if a projected growth scenario of 70% by 2030 is met. Optimistic projections of 250 years of reserves at current consumption rates, they say, are based on estimates that haven't been updated since the early 1970s. But you still hear proponents of the coal industry speaking this way. Now, according to the Energy Watch Group in Germany, US coal production is likely to peak between 2020 and 2030. India is already at peak coal production after increasing production roughly fivefold since the early 1970s. And China is expected to peak within the next 5 to 20 years after more than tripling its coal production since 1980. Now, this gives you a number of different scenarios for Chinese coal production, but as you can see, the more optimistic ones put it peaking in 2030 to 2035. Under the previous scenarios that I just showed you, Australia would peak between 2020 to 2035. The Queensland and New South Wales governments are clearly aware of these various projections and have been planning accordingly. In 2008, the two state governments approved the expansion of Gladstone's and Newcastle's coal export facilities at an estimated cost of $4.5 billion, which will enable a 60% increase over and above Australia's peak export volume from that year. Now, earlier this year, Waratah Coal announced the development of Australia's largest thermal coal mine in the Galilee Basin in Queensland, and BHP Billiton announced its intention to expand the Mount Arthur mine in the Hunter Valley from 11.5 million tonnes per annum to 15 million tonnes. And that's just some of the projects that have been approved lately. So it would seem, therefore, but the immediate prospects of mining and construction jobs from an expanded coal industry and higher export revenues trump any considerations of the potential medium to long-term costs to the environment and economy due to climate change. Our more pressing problem for both Labor and the Coalition has been trying to justify to the Australian public our ongoing dependence on coal for electricity generation. Australia's energy sector continues to be heavily dependent on coal. Between 80 and 84% of the country's electricity is generated by coal-fired power stations, and here in New South Wales, that figure is even higher, at about 92%. To put that in perspective, only Poland and South Africa use more coal per capita than Australia to generate electricity. Even China generates less than 70% of its electricity from coal, while the US uses coal to generate around 50% of its electricity. At a global level, only 40% of the world's electricity is generated by coal, meaning that Australia, at 80% or more, uses twice as much coal to generate its electricity than the world average. Okay. Coal-generated electricity is the single largest source of greenhouse gas emissions in Australia, contributing a third or more of the country's annual GHG pollution. And if you take into account the emissions from burning Australia's coal exports overseas, Australia's total annual national emissions can be doubled. In other words, our coal exports generate 3 times as much greenhouse gas pollution overseas as locally burned coal, making Australian coal by far the largest contributor to Australia's overall greenhouse gas emissions. Little wonder then that the industry doesn't want an emissions trading scheme or a carbon tax. 97% of Australia's locally generated coal emissions come from only 24 coal-fired power stations. These power stations are responsible for emitting 190 million tonnes of CO2 every year. So to put that into perspective, that's the equivalent of the annual emissions from 40 million cars, which is 4 times the Australian car fleet. That's about a quarter of the emissions from China's total car fleet of roughly 170 million vehicles in late 2008. Now, 8 of these power stations are located in New South Wales, and they contribute 1/3 of Australia's greenhouse gas emissions from electricity. And what's more, Australian emissions from electricity actually grew by more than 50% between 1990 and 2004, even though, as Lee said earlier, Australia only won a concession to increase its overall emissions by 8% on 1990 levels for the 2008 to 2012 Kyoto Protocol reporting period. And the fact that it's lower is only because we've used carbon sinks to offset our emissions. Now, CO2 emissions from Australia's electricity sector continue to rise. There are 14 coal-fired power stations on the drawing boards around the country at present, and according to Mark Diesendorf, just 4 of those plants would contribute to increased national annual emissions from electricity generation of more than 17% on 2002 emission levels. Now, at the same time, an increasingly privatised electricity sector has given no regulatory incentives to discourage increased electricity usage, and none of the state governments have shown any interest in emulating the regulatory structures of other jurisdictions, such as California, that do encourage electricity providers to support energy conservation measures and renewable energy technologies. So to summarise the story so far, we've got a coal industry that's continuing to expand, an electricity industry that's continuing to rely on coal for the bulk of its generating capacity, with both strategies continuing to be supported by significant power blocks within both the Coalition and Labor parties. But these issues, while significant and important, are at least understandable from an economically rationalist perspective. What's not understandable from an economically rationalist perspective are the hidden government subsidies which flow to the industry each year. BHP Billiton, Rio Tinto, Xstrata, Anglo-American Coal are responsible for more than 40% of the country's coal production and exports, and because these companies are majority owned overseas, most of their profits go offshore. And what's more, the massive profits that coal has recently generated for the companies concerned are further inflated by massive government subsidies, which most Australians are simply not aware of. Now, in 2007, Chris Reedy from the Institute for Sustainable Futures at UTS conducted detailed research into transport and energy subsidies that were being paid by Australian governments to the industries concerned. He found that between $9 and $10 billion in subsidies were being paid out by Australian governments in the 05-06 financial year for fossil fuels, and that's a conservative estimate. So to put that in perspective, that's about the same amount of money that the New South Wales government spent that year on its primary and secondary education systems, and what the Howard government spent that year on the tertiary education system. By way of contrast, the renewable energy sector received $330 billion in subsidies that year. Our reading also found that state governments in 05-06 provided hundreds of millions of dollars in subsidies to the coal mining industry for rebates on diesel fuel use. In the Hunter Valley alone, those subsidies were worth $300 million in 05-06, but subsidies in other states were a lot higher. Now, most people would think that the royalties flowing from the coal industry back into government coffers must surely exceed those subsidies, but that is not the case. Now, according to the Australian Bureau of Statistics, the coal mining industry paid out $3 billion in labour costs, about $13 billion in purchases and other costs, $1.6 in royalties to Australian governments in the 05-06 financial year, out of a total operating profit of almost $30 billion and operating profit of $10 billion. And most of those royalties went to the Queensland and New South Wales governments, and according to Chris Reedy, $1.7 billion flowed back into the coffers of the coal mining industry in 05-06 from government subsidies. Now, in other words, the royalty flows into government coffers from coal mining in 05-06 were more than matched by the flow of money that was returned to the same industry as subsidies. These subsidies were mostly comprised of direct rebates on diesel fuel for coal trucks and other heavy vehicles and machinery. Some idea of the indirect subsidies provided by state and federal governments through the provision of extensive road, rail and shipping infrastructure, as well as social infrastructure for mine workers, can be gleaned from research commissioned by the New South Wales Greens in 07. It suggested that $970 million in infrastructure subsidies have been spent or committed to the coal industry in New South Wales alone for the period from 2000 to 2011. That was about $100 million a year. But the subsidies don't end with largesse for the coal mining companies. We also found that state governments have provided between $1 billion and $2 billion in subsidies for coal-fired electricity in the same financial year. The difficulty of pinning down that figure more accurately is so-called commercial in-confidence provisions in government contracts with the electricity generators. So Reedy based his calculations on an extensive analysis of coal export prices and the coal consumption rates and annual profits of the electricity generators. He found that most, if not all, of the annual before-tax profits of $267 million made by one of these generators, Macquarie Generation, was attributable to the subsidisation of its fuel costs by the New South Wales government. In the case of CS Energy, which runs the Callide and Swanbank coal-fired power stations in Queensland, its before-tax profit of $81 million could have turned into a loss of up to twice that amount if it hadn't been for its subsidised coal supplies. So in other words, we as taxpayers are subsidising the profits of these privatised energy companies. So to wrap up, based on what I've told you this evening, I think it would be fair to conclude that the overall strategy of the coal industry and our major political parties is to mine and export as much coal as possible, as quickly as possible, while exploiting the scientific uncertainties surrounding climate change, climate impacts of burning all that coal, while simultaneously reassuring us that carbon capture and storage technology will be sufficiently cheap and effective that most, if not all, of the emissions from all this coal burning can be buried underground. As many of you would be aware, however, there are strong grounds for being sceptical of the claims being made for geological sequestration. Despite warnings from the Australian Treasury that geosequestration is, quote, a theoretical approach, not only very costly, no one knows whether it is a realistic storage for carbon emissions. Labor governments have committed $4 billion in taxpayers' money to this unproven technology. By way of contrast, biochar technology has received no federal government support, and research into soil sequestration has been given a paltry $130 million. Now, as Richard Dennis from the Climate Institute has argued at some length, if the coal industry is so convinced that its plans for carbon capture and storage really do stack up and that the technology will be successful, it should be putting up its own money to do the research and not asking for more government handouts to help it out. Now, Australians should be asking our government some hard questions about the billions of dollars in taxpayers' funds which we all contribute to an industry that is supposedly very profitable and helps form the backbone of the Australian economy. Now, some of the questions that I think that we should be asking, based on what I've told you this evening, I've printed for you as handouts, which are on the side tables there if you'd like to take some before you go. And that's all I've got to say.